The appraisal came in low. Why your pre-approved mortgage funding just vanished. In the late autumn of 2021, Mark and Alina Bianchi stood in a glossy presentation center north of Toronto and signed for the home they had imagined since the day they married. A brand new detached house in a master-planned community just past the city's edge. 4 bedrooms, a real backyard, a garage Mark already pictured filling with bikes and hockey gear. The price was $1.42 million. They put down $150,000, nearly everything 2 careers had saved across a decade, his in IT, hers in healthcare administration. Rates were near record lows. Prices had only ever climbed. It felt less like a gamble and more like a shortcut into the life their immigrant parents had never quite reached. For 3 years, they lived inside that dream. They drove out on Sunday afternoons just to watch it rise. First a muddy pit, then a foundation, then framing, then their actual house with their actual windows. Their daughter, 7, pressed her face to the car glass and called out which window would be hers. Their son, 5, wanted the room next to the stairs. Alina kept a binder of paint swatches and furniture layouts that grew thicker every season. They postponed a proper vacation 2 years running, because every spare dollar was sacred now, reserved for the home that was almost theirs. The warning signs came slowly, and they didn't recognize them. Closing slipped from late 2023 into the spring of 2024. The interest rates that had been near zero when they signed climbed relentlessly through 2022 and 2023 until they sat above 5%. Homes in the community that had once sold in frenzied bidding wars were now listing lower and sitting longer. A neighbor in the same phase mentioned, almost in passing, that he was worried about the appraisal. Mark didn't fully understand what he meant. They had a pre-approval letter from their bank, strong credit, stable jobs. The letter felt like a promise. In reality, it was a conditional approval with fine print they had never imagined would matter. By then, they had already booked the moving truck. Utilities were transferred to the new address. They had given notice on their rental, and another family was moving in the day after closing. There was no longer a version of this where they simply stayed put. The bridges behind them were already burning when the call came. 48 hours before closing, Mark's phone rang while he was stirring pasta sauce. It was their mortgage broker, and his voice was wrong, tight and slow, the voice of a man delivering news he wishes he could soften. The bank's appraisal had come back. The home they had agreed to buy for $1.42 million had been valued, in the cold spring market of 2024, at $1.16 million. Mark laughed at first, certain it was a mistake. The price was the price. They had a contract. The broker explained it the way you explain something terrible to someone still smiling. The bank does not lend against what you agreed to pay. It lends against what its appraiser says the property is worth today. 80% of $1.16 million was about $928,000. Their entire financing had been built on the $1.42 million number, and that number had just evaporated. The gap between what the bank would now lend and what they owed the builder was roughly $260,000. They had 2 days to find it, in cash, on top of everything they had already paid. The calls blurred together. The lender was courteous and immovable, repeating that the pre-approval had always been conditional on a satisfactory appraisal, and this appraisal was final. Their lawyer was blunt. Fail to close, and they would be in fundamental breach. The builder could keep the entire $150,000 deposit, resell the home, and sue them for any shortfall. The builder's representative, when Mark begged for 2 more weeks, was polite but unmoved. "We're sorry, Mr. Bianchi. If you don't close, we'll have to put the property back on the market. And if it resells for less than your contract price, you may still be responsible for the difference." There was nothing to negotiate. Funds by Friday, or the home was gone, the deposit was at risk, and the shortfall could follow them even long after closing day. Then came the part Mark never saw coming. Desperate, he called the bank to simply lower their down payment, to throw the deposit money at the gap instead. The banker paused and asked a routine question. Had there been any change to their debts recently? 3 weeks earlier, certain the house was a done deal, Mark had financed a new SUV for the growing family, a reasonable car for a reasonable dream. That single new loan had shifted their debt ratios. The bank was now reassessing the whole file. For one sickening afternoon, it wasn't a $260,000 problem. It was the possibility of no mortgage at all. What followed in that kitchen over 40 hours, Alina later called financial triage. They drained both investment accounts, taking the loss and the tax hit. Mark sold the new SUV back at a brutal wholesale price, the car that had nearly killed the deal, gone in an afternoon. Alina made the call she dreaded, to her father, and listened to him go quiet before he said he would remortgage part of their condo. They emptied the emergency fund 6 years in the making. Dollar by painful dollar, they built the bridge. They closed. Barely, at terrible cost, but they closed. The house they had won looked exactly as they had dreamed, and felt nothing like it. On their first Sunday inside, their daughter ran straight to the window she had claimed from the car all those months ago and pressed her face to the glass, laughing, finally on the other side of it. Mark stood in the doorway and made himself smile for her, but the rooms echoed because there was no money left for furniture. The thick binder of paint swatches sat in a drawer, unopened now. There would be no fresh colors this year, maybe not for several. Alina's father called every few weeks, gently, never asking for the money back, which somehow made it worse. Mark gave up the SUV and rode the bus to work in the dark, and on the route home it passed the very community where they now lived, and he would look up at their lit windows from the road, the way he once had on those hopeful Sunday drives, except now he was on the outside of the glass looking in, doing the math on everything it had cost to stand on the inside. They were not ruined. But every room in that house reminded them what it had cost to keep the key. And they had learned the lesson far too late to be spared it. A pre-approval is not a guarantee. The bank does not finance your confidence, your credit score, or your years of careful saving. In cold years, it finances only its own appraisal, and it is the buyer, every single time, who is left standing at the closing table to find the difference or lose everything reaching for it.